From thetraderguy.com, this is Chris. I'm taking a look at the Aussie Swiss franc pair. This is one of my favorite pairs because it measures risk appetite a lot of the time. And as you can see, I have a couple of bands drawn on the chart. And I think we have a clear area of potential consolidation. Part of the reason I say this is that we have seen a significant bounce from here previously. We have a bit of a binary candlestick on the weekly chart as well. So now that we are pulling back and it looks like we've got a fight on our hands, I think there's a clear path higher at 70. Break above there probably has this market looking towards 72.50. I don't think we get exactly there, and I certainly would take profits between now and then, but this could lead a several week move higher. And that's a good sign for risk appetite. The Aussie considered to be a riskier currency because it's so highly levered to commodities, especially hard commodities going to China. Rallying could be a good sign. The Swiss franc, on the other hand, is considered to be a safety currency, although it has its own issues because of negative rates and exposure to the European Union. That being said, the technical setup is what the technical setup is. So, if we end up breaking down below the 68 handle, I think that opens a move for 200 pips to the downside and probably coincides with some type of trouble in the financial markets. Maybe the stock market sell off, something along the lines of that. So it's a nice little setup here that I think could give us a multi-week trade. Another thing to bring into the mix is that the 61.8% Fibonacci retracement level is right here. It does tend to stick, but if we break down below there, we quite often we'll see a complete wipeout of the move. I'm willing to take my profits a little bit above there, just as I would be willing to take my profits a little bit below here. Remember, this is going to be highly sensitive to risk appetite, so it is going to be very noisy. But right now, when you look at the longer term charts, you can clearly see that this is an area that has attracted a lot of attention in the past. So we have our setup. We've got a couple levels to watch. Over the next several sessions, we should see this fire off.